Hello everyone, this is Shruti, and along with my teammates mm, Gaurav, Naveen, and Yogendra, we are going to present an analysis on Honda Motor Company versus Hyundai. So this is our agenda where I'll be discussing the industry key competitors, key drivers, and challenges. Timelines will be taken up by Gaurav, street position by Yogendra, risks, business segmentation, summary of recent earnings call, and executive compensation will be discussed by Naveen. Horizontal and vertical analysis will be discussed by Gaurav, and analysis of key ratios will be discussed by me. And finally, our positions will be discussed by Yogendra. So let's take a look at the industry, which is the automobile industry that we're talking about here. This is one of the largest employment generating industries in the world. It is currently valued at USD $10 trillion and it is expected to grow at 3.5% in 2018. You can see on the right of your screen the major countries that are involved in producing automobiles. So China, Japan, Germany, South Korea, and United States are the top 5 countries of the world that produce the largest number of passenger vehicles. Below the chart, you can see the major competitors or the key players in this field, which includes Toyota, Volkswagen, General Motors, Ford, and Nissan, apart from Honda and Hyundai. So in 2017, the US automobile market witnessed total sales of 17 million units, out of which Honda had a 9% share and Hyundai accounted for 4% of those sales. Emerging markets comprising of BRICS and the rest of the world are growing much faster than the established markets of North America and EU, and China is surpassing all of these countries in production of electric vehicles as well as passenger vehicles. So let's take a look at some of the key drivers and challenges. There is definitely a shift towards developing electric cars and hybrid cars and driverless cars. Other than that, the automobile interiors are also seeing a drastic change. There's introduction of Wi-Fi, there's introduction of haptic sensors, and a lot of technology that is going in there. This in turn is driving a lot of consolidation in the industry because of all the technology. And there's also a marked shift from established markets towards emerging markets where all the companies are focusing on right now. And there's also a lot of discussion about redesigning distribution models to include online purchasing. Some of the key challenges that we see the sector facing right now is the sector offers single-digit returns on capital investment, which are much lower than the market. There is definitely an increase in future research and development costs for acquiring all the technology for developing electronic and driverless cars and hiring technical expertise. Other than that, there's a definite reduction between the boundaries of automotive and technology companies, and there's rising costs of safety and environmental regulations.
Hello, I am Gaurav and I'm going to talk a few points regarding the timeline of Honda Motors and Hyundai Motors. First, let us start with Honda Motors. Founded in 1948 in Hamamatsu, Japan, Honda opened its first US storefront in Los Angeles, California in the year 1959. What began as a nimble operation with 8 industrial associates would quickly grow to astounding heights. In the year 1969, Honda launched the N600. It was the first ever car sold in the US by Honda. In 1974, Honda engineers create a groundbreaking CVCC engine that makes the Honda Civic the first vehicle to meet the strict emission standards of the new US Clean Air Act without the use of a catalytic converter. In 1979, Honda Accord sedan was launched. From its launch until today, Accord is the best-selling passenger car in America, with the American car buyers purchasing over 12.5 million units. In 1986, Honda launches Acura, a luxury nameplate from a Japanese automaker. In 1999, Honda Insight drives through uncharted territory to become the first hybrid vehicle available in North America. In 2006, the Honda Civic and Honda Ridgeline truck sweep the North American Car and Truck Awards of the Year. In 2014, on the March 20th, the 10th millionth Honda Accord built in North America rolls off the assembly line at the Marysville Auto Plant as Honda celebrates a total US production of 20 million Honda and Acura automobiles. In 2016, as part of its vision to create a more sustainable mobility future, Honda introduces the Clarity fuel cell to customers in California. The hydrogen-powered Clarity can travel up to 366 miles on a single tank of fuel, can be refueled in 3 to 5 minutes, and emits only water vapor. So, to summarize, the Honda Accord, Civic, and Ridgeline are the major models that cemented Honda's place in the automobile market. Moving on to Hyundai. Hyundai was incorporated in the year 1967. In 1986, it launched its first model, the subcompact HL in the US market. In 1990, Honda Motors America moved its national headquarters from Garden Grove, California to a new 18-acre site in Fountain Valley, California, an investment of $18 million. In 2000, Honda passes Mazda to become the number 5 selling Asian brand in the country. In 2010, the Genesis and Elantra are recognized as best car for the money by US News and World Report. In 2012, Honda offers a limited battery replacement guarantee for the Sonata Hybrid. 6 Hyundai 2000 models earned the Insurance Institute for Highway Safety Awards. In 2013, three Hyundai models, the Veloster Turbo, and the Sonata received Kelly Blue Book's coveted 5 Cost to Own award. In 2016, Genesis ranked highest in residual value awards in the US. So, as we can see, a vast lineup of models enabled the Korean automaker to establish their reputation in the American automobile market.
Coming to the street position and expectations, although we can see that Honda is in a better position with a rise of 79% in the EPS, and Hyundai looks like we see a 16% drop in the EPS. Still, 18 analysts recommend to buy Hyundai stocks over Honda stocks, referring to the trend of other financial reports. And they expect Hyundai to gain a lot of momentum with the release of refreshed models of Accent, Verna, and Elantra, and introduction of the new vehicles in other segments.
Moving on to the business risk segments of our analysis. Business risk with respect to Honda company may be adversely affected by market conditions such as extended economic slowdown, recession, changes in consumer preferences, rising fuel prices, financial crisis, which could trigger a decline in demand for motorcycles that may adversely affect the Honda's results. Fluctuation in prices for products such as motorcycles, automobiles, and power products in certain markets may experience sharp changes over short periods of time. Honda's operations are subject to currency fluctuations as it purchases materials and components and sells its products and components in foreign currencies. Therefore, currency fluctuations could affect Honda's pricing of materials purchased and products sold. Honda is also subject to experience various governmental regulations in its operating countries across the world, and such changes in regulations related to emissions, fuel economy, and other factors would adversely affect the Honda's business. Business risk factors related to Hyundai is exposed to various financial risks such as market risk, credit risk, and liquidity risk. Market risk is exposed to financial risk arising from changes in foreign exchange rates and interest rates. Credit risk is when a counterparty defaults on its contractual obligation, resulting in financial loss of the group. And liquidity risk is based on the maturity profile of its funding. The group analyzes and reviews actual cash flow and its budget to match the maturity of its financial liabilities to that of its financial assets. Moving on to the business segmentation part, the Honda business segmentation is into 4 parts. The motorcycle business operation, which includes the development of engines and motorcycle lines. The automobile business operations includes the development of automobile gasoline engines, battery electric and fuel cell vehicles. And the financial services business where Honda is into is actually it serves the customers and dealers through finance subsidiaries. The service of these subsidiaries include retail lending, leasing to customers, and other financial services. The power product and other businesses is the last business segment where Honda manufactures a range of power products, including general purpose engines, generators, water pumps, power carriers, sprayers, and pressure washers. Moving to the business segmentation of Hyundai Motor Co. Limited, it's into 3 segments. That is the vehicle segment. It manufactures automobiles mainly under the brand names of Genesis, Tucson, Ecus, Veloster, Azura, Sonata, Elantra, and Accent. And moving on to the financial segment, it mainly provides the financial services including automobile retail loans and auto leasing. And it also engaged in issuing and managing of credit cards. The other segment it includes the R&D, research and development, train manufacturing, and other activities which cannot be classified into the vehicle segment. And it is mainly engaged in the manufacture of railway vehicles and systems, and also provides the train maintenance services. Moving on to the next segment of summary of earnings call for both the companies, the key highlights of Honda Motors are it generated revenues of USD dollars 34,000 31.41 million, and it recorded a net earnings of US dollars 1,568.16 million. The gross margins narrowed from 22.68% to 20.85% compared to the same period last year. Operating EBITDA margins now current year 8.65% from 11.92% last year. The year-on-year change in operating cash flow of 30.59% is about the same as change in the earnings, likely no significant movement in actuals or reserves. Narrowing of operating margins contributed to decline in earnings. Moving on to summary earnings of Hyundai Motors, they recorded the revenues of US dollars 21,288.97 million. They recorded a net earnings of US dollars 749.80 million. The gross margins widened from 17.75% to 18.07% compared to the same period last year. The operating EBITDA margins this year to 8.65% from 8.63% last year. Year-on-year change in operating cash flow of minus 42.79% is about the same as change in the earnings, likely no significant movement in actuals or reserves. Earnings declined, although operating margins improved from 4.84% to 4.98%. Coming to the next segment of executive compensation, the Honda Motors executives, the premier executives such as the CEO, president, the executive vice president, executive officer and representative director, and the other senior managing officer and directors are as follows. Takahiro Hachigo, the chief executive officer of Honda Motors, enjoys total compensation of over 11 million, and the other senior managing officers, whereas enjoy total compensation of more than 5 million. Coming to the executive compensation of Hyundai Motors Company, the chief executive officer and chairman Chung Mong Koo enjoys a total compensation of 8 million, more than 8 million, and the other president and vice chairman enjoys a total compensation of around 1 million and 2 million.
I'm going to be sharing a few points on the horizontal and vertical analysis. The horizontal analysis is the percentage analysis of increases and decreases in related items in comparative financial statements. There is a sizable difference in cash and cash equivalents and financial assets between the two companies. Next, moving on to horizontal analysis of the income statement. For Honda, the sales declined due to negative currency translation effects, even though the operating profit increased. For Hyundai, sales, cost of sales, and selling and administrative expenses increased gradually, which accounted for the decline in net profit. Next is vertical analysis. Vertical analysis is a percentage analysis used to show the relationship of each component to the total within a single financial statement. In the vertical liability and stockholders' equity item is stated as a percentage of total liabilities and stockholders' equity. Honda had a substantial increase in cash and cash equivalents, short-term financial instruments, and financial services receivables from the previous year. Similarly, Hyundai had an increase in financial assets. Vertical analysis of income statement is where each item is stated as a percentage of net sales. For Hyundai, the cost of sales, selling and administrative expenses is relatively higher.
Let us now take a look at the key ratios of both the companies. To start with profitability ratios, the earnings per share of Honda rose by nearly 79% to Japanese yen 342 in FY 16-17. This was after 3 years of consecutive decline. On the other hand, Hyundai, which has been witnessing a consistent decline in its earnings in the past 5 years, saw yet another decline in the 2 years of analysis that we conducted. The earnings per share of Hyundai declined by 16% due to a decrease in its gross margin and profit margin. A quick look at the gross margin chart indicates that Honda's gross margin has been constant at 22%, whereas that for Hyundai has declined due to an increase in its cost of goods sold. The net earnings of Honda has been on the rise from 3% to 5% for the years of analysis, whereas Hyundai's net earnings have been declining consistently. When we look at the asset turnover ratio for both the companies, we see that Honda's asset turnover ratio is much higher at Hyundai's than Hyundai's at 0.74. This indicates that the company is more efficiently utilizing its assets to generate sales. A quick look on the return on equity, which has increased for Honda from 5.78% in 16-17 to 8.98 in in 5.78% in 15-16 to 8.98 in 16-17, whereas that for Hyundai has declined. So this indicates that Honda's increase in earnings is making it a better place to provide returns to its shareholders than Hyundai. When we look at the current ratio of both the companies, we see that Honda's current ratio is much closer to the industry average of around 1.2 for the automobile industry when compared to Hyundai. A higher current ratio indicates that a higher current ratio, although being good for both the companies, definitely indicates that one, they're not utilizing their resources such as cash efficiently. With the higher current ratio of 1.66 at Hyundai, we can see that there's definitely scope to put its cash resources to better use. The quick ratio for both the companies is almost the same at around 0.87 for Honda and 0.85 for Hyundai for the year ending 16-17. So the quick ratio for Hyundai increased due to increase in operating profits and decrease in its receivables from trade and financial services. This indicates that the companies are in a good position to take care of their short-term debt. And when we look at the debt equity ratio, the numbers for both the companies at 1.50 and 1.47 for Honda and Hyundai are much lower than 2.5, which is the average of the automobile industry. This indicates that for the current level of equity, both the companies are capable of taking in more debt.
Coming to our position, from an investors and creditors perspective, we analyzed Honda and Hyundai on profitability ratios, and we found out that earnings per share for Honda Motors is higher than Hyundai's and is on an increasing trend, which supported by steady gross margin and increase in the company's profit margin. Higher asset turn ratio of Honda indicates a higher revenue generation and increase in the return on equity percentage of Honda Motors, supported by the recent increase in the income forecast, boost Honda's position as a potential investment. Lower current ratio of Honda indicates efficient utilization of cash resources, and a healthy debt equity ratio for both Honda and Hyundai indicates a healthy mix of debt and shareholder equity. But Honda offers higher returns, and this makes Honda a better option of an investment. Investors also look at future plans and investment strategy of any company, and we found Honda more progressive in its future plans. Honda has a plan for electrification of its 2/3 of vehicles by 2030, and we saw an increasing trend in the R&D budget of Honda. And Honda has also plans of improving its efficiency by collaborating with Waymo in US for automated driving, and General Motors for production of hydrogen fuel cell systems. Coming to the creditor perspective, we looked at profitability ratios. Honda has a higher net income compared to Hyundai and is an increasing trend, and has a higher asset turnover rate. Lower current ratio of Honda indicates efficient utilization of cash, although debt equity ratio for Honda and Hyundai is lower, hence both are capable of taking up more debt. We observed a continuous drop in net income of Hyundai in previous 5 years, approximately 25.4% drop. On the other hand, Honda displayed the ability to recover from the drops from previous years with an increase of 78.91% in the net income. Coming to the conclusion, we conclude that Hyundai has been facing downfall for continuous 14 quarters, and the main reason being the weak brand image compared to its direct global competitors like Honda, Toyota, and GM. Hyundai also faced downfall due to political tension between South Korea and China, which is one of the major markets. Hyundai made several bad decisions, out of which installation of the new factory unit in southwestern region of China was a very bad decision. Being said, the eastern factory units are still underutilized. Honda displayed a comparatively progressive business strategy towards electric vehicles and introduction of newer models through the various segments. Honda at PE ratio of 6.34 is in better shape with Hyundai with a PE ratio of 10.26, which suggests more earnings per dollars from Honda.